morning. Welcome to the weekly Livestock Market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good morning, Scott.
Good morning, Megan.
Grab your cup of coffee, sit down for a spell, and we'll talk a little. We're going to talk livestock slaughter. We'll talk some cold storage. Cattle on feed numbers had a little bit of a surprise in there for us. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, if we start this week on the cattle side, we had fed cash cattle that were down $4.10. Those feeder cattle markets this week were down $5 to $10. On the futures side, the August fed cattle futures contract was down 80 cents, and the August feeder cattle contract was down 20 cents. On the beef side, the choice box beef price was up nearly $4. Let me say that again, down nearly $4. That still puts it nearly $70 above where it was a year ago at this time. On the hog side, cash barrels and gilts were $3.50 higher this week. The July lean hog futures contract was down a little more than 75 cents this week, and the pork cutout value gained $5 this week. That now puts it only $15 below where it was a year ago, and we had strength across the board in all those components of that pork cutout value this week.
Definitely kind of a pullback from what we've seen overall the last couple of weeks on the cattle side of things. How much is maybe what's going on with the weather markets of corn and soybeans contributing to some concern as it relates to feeding costs for cattle and hogs?
So I think there's certainly some of that and I'll say, you look at fed cattle prices this week at a $1.83 roughly. That's still pretty strong prices. We've just been awful strong in terms of those prices. So I think just a little bit of pullback from what's been a push of record prices here for a period of time. But for sure, as concern grows about what we're going to harvest this fall, I think there is some interest in trying to, especially feeder cattle, bid those lower as cost of gain continues to rise.
I will say I did a 800-mile loop up through northern Kentucky, central Indiana, over into north central Illinois, and then back down central Illinois. And I saw varying degrees and conditions of corn. Nothing was I don't think I saw fantastic corn anywhere. It went from just okay to really not great. But the one thing I did see was soybeans that were just short everywhere. And it's going to be real interesting if we go another couple of weeks without any measurable rainfall in this part of the country.
Yeah, for sure. I keep saying that, more and more, this all depends on what happens in front of us in terms of whether we have a good crop or not. Without some rain at the right times, I think we certainly know we're going to have some yield drag as we look ahead. And I'm not going to be surprised when USDA finally gives us some yield information that they'll come off of those trend yields in some of their first estimates as well.
Let's take a look at slaughter numbers for both cattle and hogs this week.
Yeah, so USDA tells us for the week ending June 24th, around a 649,000 head of cattle this week. That is 15,000 head above where we were last week, but 16,000 head below where we were a year ago. And a run of hogs this week of 2.372 million head of hogs. That's 42,000 head more than what we ran last week and 60,000 head more than what we ran a year ago.
How are we looking year over year for both cattle and hog slaughter?
Yeah, on the cattle side, we're down 3.6% year to date, while on hog slaughter, we're 1.2% higher.
A pretty big set of reports this week. We'll start by taking a look at livestock slaughter numbers. As you look at those numbers, how are they stacking up, and what are some things that you're seeing?
Yeah, so if we look at what we did for May of this year, a total beef production of 2.3 billion pounds of beef produced. That was actually 0.7% above what we did May of 2022. what was a run of 1% higher cattle slaughter for the month of May. Production not quite up as much as slaughter because we did see a 1 pound decline in cattle dressed weights out of the May data. When you look at year to date, it puts beef production 11.2 billion pounds. That's down 3.8% relative to what we did in 2022. On the pork side, for May, pork production was 4.1% above last May. That was on a 5.5% increase in hog slaughter. Hog dressed weights were down 3 pounds May of this year relative to last. And when you look at year to date pork production, 1.5% higher.
Scott, one thing that you and I talk about regularly as we take a look at this livestock slaughter report is beef cow slaughter numbers. Talk to me about how those are stacking up and what that kind of indicates for the industry.
Yeah, so as we think about that, number one, year to date, federally inspected beef cow slaughter, 1.4 million head. That compares to 1.6 for the same period in 2022. So we do have beef cow slaughter that's down. However, I think the important thing to think about here for a minute, for that period in 2022, that slaughter was roughly 5.4% of beginning cow inventory. So kind of a way to think about how many cows did we have in total. The highest number we have seen since the start of 2000. When you look at 2023, that number fell to 4.95%. So it is a lower percentage of the beginning inventory that's been slaughtered year to date. However, back in that 2015 period, 2015 to 2018, that average was 3.5%. So we're not, I always say we're not building. That data tells me cow slaughter is now not down enough that we're actually building cow inventory, and you have to get probably below 4% of that beginning inventory before you talk about any kind of real some potential increase in beef cow inventory.
I would have to think with how the weather is playing out this year so far, that's really going to push any thoughts of growth off that much further.
So I do think we have some different things happening in different parts of the country. In total, yes, I agree 100% with you. Some places that were dry a couple of years ago, they've probably gotten a little better, that we might actually see some building, but it's just recovery. It's not frankly new growth. Yet you've got other parts of the country, I sometimes say Oklahoma, Kansas, Nebraska, Missouri, where it's dry enough that I think it's just tough, even if you wanted to expand, to make sure you had the forage base needed for that expansion plan.
Cold storage also out this week, Scott, as we take a look at that. What are the ending stocks looking like?
Yeah, so we start on the beef side. It's actually continued reductions from 2022. We've been doing this for a few months now, but for the end of May, we're actually down 19.5% in total beef ending stocks. On the pork side, also down in total, so down 3.7% May of this year relative to May of 2022. Yet when you start looking at the components of what's happening on the pork side, pork bellies up 45.5%, loins down nearly 17%, so a little bit of mixed bag. You throw on top of that chicken ending stocks that are 10% higher, and that's because breast meat up 32%. It just reminds me to say that it's a mixed bag. Beef being down the most, but a lot of chicken supplies, it looks like, are available. Maybe that tells us a little bit about relative prices of some of these things are going to continue to get wider as beef gets tighter, and ample stocks of chicken seem to suggest some cheaper chicken prices ahead.
And I would have to assume too that what happens with high path avian influenza, if we see another incident like we had, or instance like we had in 2022, that could maybe put pressure on those chicken stocks as well.
Yeah, absolutely. But very, very relevant to the discussion. If we were to have a big outbreak, of course, those stocks go away in a hurry. And it just reminds me to always say, this stock discussion is important, but it's all about production month to month that matters. And nothing like a little high path AI to cut production enough to pull those stocks back down pretty quickly.
Cattle on feed. A little bit of surprise in there. Let's run through those numbers.
Yeah, so if you look at on feed as of June 1st, the report gave us on feed of 97.1% of a year ago. That wasn't much of a surprise, a little bit outside the upper end of the range. But it was really those placements in May that got folks' attention. The average pre-report estimate was for a 101.7. So most everyone was talking about higher placements. Yet when you looked at the actual report, USDA gave us May placements up 104.6% of a year ago. Imports from Mexico, Canada probably helped push those May placements higher than anticipated.
How does that set up as we look ahead then to obviously the July report, but also the cattle inventory report that will come out next month as well? What are we kind of thinking about leading into that?
Yes, I don't think it changes this longer term look that we have of we're going to have tighter inventories. I think we look at July 1 beef cows, we're going to be down, maybe not down as much as we were from 21 to 2022, but going to continue to be down July 1 of 2023 relative to July 1 of 2022. I don't think any of that changes. And we'll just keep getting tighter in terms of, beef supplies as we get later into 2023 and then on into 2024.
Looking ahead to next week's reports, a couple of biggies in there.
Yeah, so we'll get a shot of quarterly hogs and pigs next week, which will be interesting to see what kind of potential breeding herd contraction we might see out of that report. We also get a restaurant performance index. And then at the end of the week, we're going to talk about the USDA's acreage report. So what happened to corn and soybean acres relative to prospective planting. So big week next week.
I think we will probably be taking a very close look at the state numbers in that quarterly hogs and pigs report.
Yeah, that's right. Where are we going to see contraction and why are we seeing contraction? And it could be a very interesting look at just where we've seen some shifts, especially in breeding inventory.
I think part of that discussion also kind of has to be a little bit of Prop 12, but the announcement this week that the California Department of Food and Ag kicked the can down the road a little bit, punted, and has delayed implementation and kind of giving it an additional grace period. How does that set things up long term? And do we potentially see some more punting down the road just so everybody could get I's dotted and T's crossed and become compliant potentially?
So I've said implementation is hard. And that I think really is what CDFA is struggling with. I'm glad not to be in their shoes trying to implement Prop 12. I'll say that. But to me, this kind of just pushes further down the road some of the impacts of Prop 12 and maybe results in a less abrupt change than we would have thought just a month or so ago in terms of the effects of Prop 12. You push it out long enough and you give folks enough flexibility to better adjust. That's not me saying there won't be costs associated with trying to meet the Prop 12 requirements, but the longer we have for the industry to try to adjust, I think it in some ways makes that adjustment a little less painful.
I feel like it gives a little bit of certainty to producers right now, but then also consumers as well, knowing those products will be available.
That is correct.
It's a big market to, it's a big market to fill.
It will certainly come with ebbs and flows in terms of that uncertainty about what it really means. But you correctly identify, at least for pushing it down the road here another 6 months at this point.
Always great to see you. We will see you next Friday.
Sounds good, Megan.
So our weekly livestock market emailed to your inbox every Saturday morning. Today it'll be Saturday afternoon. Go to brownfieldagnews.com. You can submit questions and comments there. And for a rundown of what happens every day in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.